What is going on, guys? Thank you guys for tuning in to another video. On today's episode, we want to go over what are fair value gaps. All right, so we're gonna be pretty quick. Just gonna dive straight into it. Now we are doing Tesla. Now the reason I chart Tesla so much is because it's pretty much my bread and butter. I absolutely love trading Tesla, and it formed a perfect fair value gap. Now, for those of you guys that don't know, a fair value gap consists of three candles. Now, a fair value gap is an imbalance in the market, and I kind of want to show you guys what it looks like. And I like to simplify things very simple for you guys, and I like to make it really easy. So here we have a perfect example of what a fair value gap looks like. There is an imbalance in the market. All right. Now, like I told you guys, it consists of three candles and it forms a gap in between those three candles. As you guys can see here, look at this little red candle here, and I want you to look at this red candle right here. All right, this one, or the first red candle right there. All right, now there is a gap. Here is the gap right here. This green candle here, there is a gap. Now, as you guys can see, we are on the 1 hour. Now, it did get filled, not all the way. It did not close all the way. It didn't get filled all the way. But look, I want to show you guys this. I'm going to remove this drawing here. Remove that drawing. Now, we still have an empty space within these three candles. Here is the imbalance. This means that price moved so fast that it did not give it a chance to even execute any orders in that space. A perfect example that I seen was picture yourself running through a hallway and you're hanging rings on the doors as you're running through the hallways, right? Let's say you're in class and you're running through the hallway and you're hanging rings on the door. You go so fast that you blow by two doors and you forget to put rings on those doors. Now, in order for you to win that race, you have to come back to put those two rings on the door to continue to keep moving forward. That is the same concept here when it comes to fair value gaps. All right. Price moved so fast through here that no orders were executed, and we have to come back into this imbalance area to fill the orders that were left. As soon as it fills these orders, we're going to redirect ourselves back in the same path. Now, this here is a bullish fair value gap, and I'm going to draw it out for you guys here so you guys can see. All right. We'll move it out a little bit more. Here we go. Let's bring this down just a little bit. Things usually hit precise on here, but there we go. All right, here's our gap right here. This right here has created a fair value gap. This here is our imbalance. So when the market continues to redirect, any other move to the downside into this level, and I usually like to do this in green. It just makes it a little bit easier when we are bullish in the market. There we go. There we go. All right. Now, just right here, in my mind, it puts that, hey, we're going to go into this level and we're going to bounce right back up. Now, I want to give you guys another example here of what fair value gap looks like, okay? Let's see if I can pull one up here. Here we go. Here's a good fair value gap right here. All right, this level right here. We're gonna zoom in. All right, like I said, a fair value gap has to be three candles. We have this red candle here and we have this green candle here. We have an imbalance in the market. This area here is the imbalance. Now we're gonna highlight it. All right, we're gonna push it right there. That's perfect. Perfect imbalance right here. What happened when we came back into this area? Here we go. So what happened when we came back into that area? We bounced off that area and we continued momentum to the upside. All right. Our fair value gap showed us that there was an imbalance in the market. There were orders that still did not get filled. As soon as we came into this area, orders got filled and we continued to move upwards. All right. Perfect example. Now this here is a little bit later in the market, in the evening. This is 11 o'clock, which is pretty late. I personally don't know if I would have waited that long to take that trade, but I would have taken this trade here because we did go into that area and that at what time is that? 8 o'clock. All right. So that right there was a perfect example of it going into its fair value gap and then redirecting itself back to the upside. All right, this right here was perfect. Right here we had wicked in here, volatility was extremely high, but we continued momentum to the upside. All right, so that right there was a perfect example of what a fair value gap looks like. Now let me see if I can find another fair value gap. I love to give you guys 3 different examples. That way you guys can see exactly what it looks like. Let's look at one to the downside. All right. This right here is a consolidation zone. I don't really like this just because the market's moving sideways. This probably was FOMC or maybe tech. We had tech earnings. Tesla had earnings. So you know what? Tesla did have earnings during this time. So let's extend this out a little bit just so you guys can get a better view exactly of what it looks like possibly to the downside, because we did, I mean, you guys see what it looks like to the upside, but that is the same area. We got one right here. This is a perfect one right here. All right, we got 3 candles up here. Pull this up. All right, so here we go. All right, here's our fair value gap right here. We have 3 candles right here. This one is perfect. We're gonna play this one to the downside. We have our area there and our area right here. We're gonna extend this top right corner. We're gonna go 11.7. Bam. All right. When we go back into this area, now we do not always have to go back into the area the next day or 2 days after. It can take some time sometimes to go back into that area. As you guys can see here, this was on October 7th, and we did not come back into that area until October 10th. Okay. And as you guys can see, when we came back into this area on October 10th, we fell out nasty. This move was very aggressive to the downside. I want to show you guys really quick. Yeah, this move was really aggressive to the downside. Look at, here's our fair value gap. Remember I told you we got 3 candles. 3 candles signify, and our space in the middle signify a fair value gap. Green candle here, red candle here, space in the middle here. We have our imbalance. Orders did not get filled. We have to fill them. So when we come back into that area on the 10th, we do get filled, and price continues to move down, as you guys can see. All right, price moved down, and this right here was a beautiful put play from 443 all the way down to 411. Massive move. Now this here isn't a move that you would hold all day. You will probably hold it from 443 possibly down to 416 maybe. But yeah, this was an aggressive move. If you played puts on this one, this is exactly how you play it. You draw out your fair value gap, you set out where your imbalance is, and you draw it out. Whenever price moves back into that area, you execute your play. All right. So that right there is what a fair value gap looks like. You want to make sure that you chart things out before you only draw your fair value gaps, all right? You want to make sure that you do your support and you do your resistance. Make sure you draw your channels. Make sure where supply and demand is at. And then you can go ahead and do your fair value gaps. Me personally, I also like to trade having the footprint chart, having the heat map as well. That way I can see how many orders are being executed and what the orders are looking like inside of these candles, instead of just looking at these candles just red and green and not really understanding what is happening inside of the candle. But again, guys, this here is a fair value gap. This is a strategy that you guys can use. You can try it out. Always say, if you're testing, make sure you guys test this with very small amounts of money. Do not go ahead and go all in on this as soon as you see a fair value gap, because you're pretty much guessing. All right. So again, guys, thank you guys for tuning in. Thank you guys for watching, and I will see you guys on the next video. Hopefully you guys learned something. If you guys have any questions, or if you guys want me to go over anything, make sure that you guys leave it in the comments down below. Hope you guys learned something today, and I'll catch you guys on the next video.